talking numbers in this episode's first segment, thanks to Michael Shelton, the Roanoke's resident financial expert and writer. Michael was in our 40 Under 40 class of 2021, thanks to his hard work in the region at 360 Wealth Consulting. An Iraqi Freedom War veteran, Michael Shelton has offices in Roanoke, Lynchburg, and Richmond. He developed a landmark AI resource enabling business owners to stream financials in the medical, construction, and real estate sectors, and has received the prestigious Chartered Retirement Planning Counselor designation from the College for Financial Planning, and holds the Registered Financial Consultant credential. Hi, Michael. Thanks so much for coming on the podcast today.
Hey, nice to see you, Liz.
Yeah, thank you for being here and sharing all your wealth of knowledge that we're about to dive into today. So I'm thrilled you're here because I'm an English major who actively avoids math whenever possible, except, of course, at tax time, right? That's when you got to focus in. And so I'm also an LLC small business owner with lots of questions when it comes to my financials. And your feature in our November-December issue regarding how to better prepare for fourth quarter financials was a great way to learn more about my options and expectations and responsibilities. So thanks for doing that. We appreciate your insight there, certainly.
Yeah. And I understand I'm a math guy and I barely made it through English. So.
We'll balance each other out then. We'll get through this together. So first of all, we want to start, what are the basics as far as when it comes to planning for your fourth quarter goals? And so you had said that you wanted to start off maybe talking about cash flow. And so what does that mean exactly when we're talking about that?
Yeah, so cash flow, how your business or personal, I try to have people change their mindset even if they don't own a business to your home is a business. You have income and you have expenses.
Right.
So how much do you bring in every month and how much goes out? And then what is left? So that's a monthly, most of the time. We sit down in our household the 15th of every month, pay our bills, and most people have monthly bills. So that cash flow every single month, how much is left and how you're budgeting, that's very important to most people, and ensuring that you're putting your money in the proper places.
Right, exactly. Because, obviously what will happen is your money will be, you don't even know where it goes, right?
You don't. I like to tell people it's like a diet. You can't wait till December.
That's a pretty good analogy. I hadn't thought about it that way. That's so simple, but that makes total sense.
You can't wait till December and say, I'm going to fast. Right. No, this is the holidays.
No, you got to eat the cookies, right? Yeah. So in talking about that, you'd mentioned something, accumulation versus distribution. And again, just sort of thinking about what that means. And again, to listeners and readers, we're talking about both as a business owner and an individual, within the residences. So
yes, yeah. So in your younger years, you're accumulating your money. You're putting it into your savings or 401k, and that's the focus during your working years. And then when it's time to stop working, earning income, and relying on your savings, so that's the distribution phase.
Okay.
So that's where cash flow really comes in. You'll notice during the distribution phase that you'll learn a whole lot more about cash flow at that time.
Sure, you're ready to plan it all out and see what you got, see what you're working with.
Exactly.
Yeah. Well, that's interesting. And so, and talking about that, does that affect your tax bracket at all? Different age groups, that money that you're earning, things like that affect that too, right?
Yes, yeah, and that's what you really want to focus on. Different types of accounts have different tax obligations, some tax-free, some taxable. But that's really where you have to look at both sides. Do we put money away for a tax deduction in order to keep our tax bracket low? But that could be a ticking time bomb when you go to pull it out, when you're really relying on the dollars that you saved. And you don't want any of those dollars to go to taxes.
Right, you want to keep those for yourself, right?
So, yes, the tax bracket is one thing that we focus heavily on. We want to keep it as low as possible. Keep your money in your pocket, not Uncle Sam's.
Yeah, that's fair. And so you mentioned tax deductions, and we're talking about the difference between tax deductions and tax credits. What are the differences? What is that?
Yes, man, I noticed people kind of dismiss the tax credits, but that's free money on the table.
I like those words.
Yeah,
that's good.
Especially from Uncle Sam. So, especially the business owners. Yeah, there's various types of credits. This year, a big one that went away was for business owners to open a 401k, you can get up to, I think it was $5,600 in tax credits, because they're really incentivizing people to save money and not rely on the government, Social Security. So tax credits, if you think about, most of us have kids, right? Child tax credit, that's a credit. That's $2,000 directly in your pocket. So
is that per kid too? Or is that all?
Yep,
Okay.
per kid, and so oh my gosh, there are about 20 tax credits that most people can focus on and see if they qualify for.
And does that count when you're running a business? So, for example, my office space, right, or my phone bill, or my car, my mileage. I mean, all those things count, even though
those are deductions.
Right. Okay.
Yep. So yes, especially after COVID, the home office that's been a big one for a lot of people. As we've noticed a lot of people changing from W-2 to 1099 in this new gig economy, and with the Uber and Lyft drivers and door dashing. Yes, got to take advantage of those, because you earn those dollars. And you get taxed on every dollar you earn as a self-employed individual. So,
right.
So absolutely, those deductions, yes, they're different than the credits. One big one I'm really focusing on now is research and development credit. I'm really focusing on it because I'm doing AI. So
And
how do I get free money?
Yeah, I want to talk about that. So let's take a brief pause on our questions here, because I want to talk about this AI that you've helped develop and be part of. How did that start? Like, I mean, this was back in 2021 when we wrote that 40 Under 40. So you've been working on this for a while.
2018. Yeah, so it's been 5 years. So I did intelligence in the military. So I was thrown into technology early on. So I fell in love with it. So yeah, when I created my own company, I realized, holy smokes, I had at the time, I think it was 15 employees.
Which is a lot. That's a big responsibility.
That's a big responsibility, and a lot of them are doing the monotony work of the bookkeeping for business owners. So, I heard about this AI that was being created by a company called BotKeeper, and so I linked up to them early on. I was an early investor, did everything we could to help them grow their side while we're helping them, find the issues and try to create the efficiency for bookkeeping, because bookkeeping is a commodity.
Okay.
It's a commodity, and you already have the data coming in, and you already have, for example, QuickBooks or Xero recognizing a lot of the transactions if you have the same transactions, which most of us do every month. So the AI is an extra layer on top of that to help the QuickBooks and avoid the need for the manual labor, the expensive part. Because anymore, the reason you hire a financial person, an accountant, a CPA, whatever, is to create reports. So this helps create the report, so we're not sitting there wasting time on this. We need to talk about, how do we keep more money in your pocket? How do we get those tax credits? How do we get the deductions? What are we missing?
Right.
We're supposed to be talking about the reports. It's supposed to be advice-oriented, not really a service anymore. We have technology to take care of that.
That's so fascinating. AI is obviously a very hot topic right now, but the fact that you jumped in on it almost 6 years ago, I mean, you've been in on it for a while. So and your, of course, experience and your knowledge in that with your military background, that is a huge benefit to you kind of being ahead of the curve, honestly.
Oh, yeah, it was the beginning of the wave.
Yeah.
And so this year, it's exploded.
I'd be curious to know, so from beginning, when you started on all this, to today, currently, so we're in, late 2023, AI, I'm sure, has evolved in maybe even more ways than you could have imagined from the beginning.
Right.
Yeah.
Absolutely. The algorithms and what we're realizing on the back end of all this has been perfected almost. And now it's getting to a different area on how do we expand and take this software and link it up with other software, because now we have the software working. Now how do we exponentially grow it and link it up with other softwares to make life easy?
Yeah.
Because again, I preach it, I yell it, I scream it from the top of the mountain. Anymore, you're not hiring the accountant to do the manual labor of reports and tax returns and payroll and sales tax or whatever you have them doing. Those items are now, it's pretty much a commodity. Technology's taking care of it. What you hire them for nowadays is to go over the reports, to talk about what's going on.
The personal touch.
Yes,
the thing the robots can't do.
Strategies, right. Yes. Yeah, I mean, the robots can create a story, but...
Yeah. Oh, they can't, by the way. Speaking as the story writer, they cannot. That's what we're here. That's what I'm here for as the English major.
Yeah. It's not the... it's not an actual emotional story, right?
Yeah. But it does the heavy lifting for you.
Yes.
Yeah. I mean, I'm very much of the think smarter, not harder wave. And I mean, it allows you to do your job more efficiently and better and more personally to your clients. I mean, that's really important.
Yep.
Yeah.
Yeah. It's a benefit. It's just another arrow to help with your everyday job.
Yeah. Well, in a way that, you always hear the robots are going to take our jobs, and, that's a whole nother conversation to be had. But the fact is you're using this as a tool to enhance your business.
Yep,
and,
exactly.
And you're using it to your advantage, which I think is really key. You're not laying people off. You're helping them do better work because you have a tool to help you do that.
Exactly.
Yeah. That's really interesting. Sorry, so to go off on that, that's been the hot topic in my head for the last few months, just all the reading and stuff. And so I'm fascinated because I'm seeing it from the word side, right? I'm hearing it from the stories and the writing side. So to hear it from the number side is really interesting.
Yeah.
Yeah, that's really cool.
I'm trying to get more people in on it.
Yeah.
But unfortunately, the accounting industry is so slow to move.
Yeah,
so.
That's all right. You're ahead of the curve. You're the leader in it. When the time comes, you'll be the leader everyone goes to ask for information.
Already am.
Yeah, exactly. So we talked about standard deduction, talked a little bit about itemizing. Is there anything else that we need to think about when it comes to those topics as individuals and small business owners?
Just make sure you're actually taking advantage of the itemized deductions. That's a big one.
What are things that we overlook as an individual? I know my CPA is always like, give me your phone bill. What was your phone bill at the end of the year? Because I forget about that.
Yep.
Like, what are easy little things that we should be thinking about?
So the itemized deductions, I was having lunch a couple weeks ago and talking to somebody, and she said, hey, I just took my husband to the doctor. And I said, make sure you save your receipts. They went to UVA for treatment. I said, make sure you save your receipts. That's a deduction. So the medical one I see a lot for the older generation. They're not taking advantage of, if you have to go to UVA or Duke or something like that, make sure you keep track of the mileage. Make sure if you have to buy a hotel, all your food, parking expenses, all those items add up along with your charitable giving and taxes that you pay. And all that adds up, and you might be able to itemize instead of taking just the standard deduction.
Yeah, and I know, so my husband's a teacher. Listeners know that. Sorry, I mention it every podcast episode. But we're reminded every year to save the things that he has bought for class and for teaching to use for work. I'm reminded to write down my mileage, even if I drive 4 miles down the road, that still counts, and so that's interesting stuff, office space and furniture and equipment that you're buying, your laptops, things like that are so easy to think, I'm just buying it for my everyday use, but you will be using it to some degree for business opportunities.
And especially nowadays with the gig economy, that's always a big one. But I use my cell phone to talk to my wife and kids, right? Well, you use it for job.
Right.
Mostly,
and
probably.
And it's particularly interesting that you mentioned the side gigging, because that again is another hot topic, and we see I see all these fantastic vendor marts and Virginia vendors and things like that, these events, and you meet all these wonderful creative people who this is what they do, and so it's interesting to see that they certainly need this reminder of what they're able to write off so they can save themselves a little money and not owe a giant bill at the beginning of the year.
Exactly. We do it every year, but it's once a year, so it's easy to forget.
Yeah, and as a freelancer, there are so many responsibilities you have to think about throughout the year, because sometimes if you don't, suddenly this bill comes and you're like, oh no, I haven't saved up for that, or I didn't squirrel away something every quarter so that I was prepared for this at the end of the year. Like, that's really important.
Yeah.
Things I've learned. Ask me how I know.
By experience.
Yeah. So before we got started, you were talking about a particular topic, savers versus investors. And so I'm curious about what that means.
Yeah, that's one I realized just through the years, just talking to people, I realized that pretty much there's two groups of people.
Okay.
You have the very conservative saver, right? I worked hard for these dollars. I don't want to put it at risk. If I invest it, can I lose it all type of deal, right? So I call them savers. But then it's kind of funny on the other side, you have the people that want to constantly invest in high risk. So those are investors. I want to make my money work for me. I want to get out there and do it quick, and they don't really save a lot in their savings account. So I realized, there's pretty much two people. You have the savers, usually the older people that are slowing down and appreciate their hard-earned money more, and then the younger people trying to make the quick buck, right? So it's really difficult because you have a hard time turning a saver into an investor and an investor into a saver.
Yeah.
And so I like to kind of separate that. And once you say that, it makes people think, oh, smokes. Yeah, I get it.
Yeah, because you mentioned risk tolerance. So that's something that we have to think about. But you've talked about different generations, which I think is interesting. We've covered some features in the past in terms of if you're at certain points in your life, maybe here's some suggestions on what you should be saving for, what you should be doing. And so, a lot of the younger people are side giggers, and they got to make their rent, they got to buy a home, things like that. But they kind of have to turn into, how do you turn into an investor? At what point do you think that kind of comes to light? Oh, I need to really think about my future because I've gotten through my day to day, and now I have a little bit that I can really think about down the road.
I notice it more around the 40-year-old age. A few reasons. They notice that their cash flow is heavier normally. So, oh man, I ended up saving up $10,000. I need to do something with it. I just can't sit there earning what everybody says 0.1%. So, not nowadays you can actually get pretty good interest rates out there. So make sure you're not just leaving money. The banks appreciate it if you leave it in that savings account, though. But it's not good for you. I notice, it's usually their kids, if they're not spending all the money on travel ball and things like that, travel cheerleading, whatever, they see a lot of a heavier cash flow, and that's normally what I see people start to save. But of course, we want to start it ASAP.
Right.
I started at 13 years old myself.
Wow.
And it's very impactful to start younger. But
did your parents impress that upon you, or was it something you just kind of learned at school?
I just had a knack for money. You just
had a knack, man. All right.
I did. Most of this is actually self-taught.
That's awesome. Well, you've gotten pretty far, I'd say. My goodness.
Yeah.
That's pretty cool. So that's very interesting. And thinking about, it's funny you say 40 because a couple of years ago, I finally took the step into going from a saver into an investor. And I wouldn't say I'm a huge, I'm not like a hardcore investor. I'd like to think I'm somewhere in the middle of the balance.
Yeah.
But it's reassuring to me that I can see some money in my bank, but I also know that there's some money out there, earning on top of that.
Working for you.
Yeah, absolutely. Smarter, not harder. We talked about that.
Exactly.
So, okay, talking about, we can talk about business owners versus individuals on this one, but tax records to keep, knowing what correct tax records to keep. What is that advice?
Yeah, either it's kind of like the savers and investors. Either you have the person that saves every single document for 20 years or people don't know where the heck their documents are, right? So, individuals, you really only need to keep it for 3 year, maybe 5.
Okay.
But I like to say 3 years because if you can amend a tax return for the prior 3 years, if you amend it, then you can actually get a refund if you're refundable. If you missed a deduction or didn't do it right, you changed your corporation or something like that, and you get money back. So you can get money back up to three years.
Okay.
If you amend the 4th year, yeah.
Tough luck.
Tough luck. Yeah. Recent scenario there. I hate it for her, but yeah. But that's where I say that. Now, for business owners, 7 years.
Okay. Oh, much longer.
Yeah, much longer. And it's really funny in the tax code. You have to keep records indefinitely if you committed tax fraud. So.
Well, that seems
so if you
pretty,
did that,
yeah,
make sure you keep all your documents.
Yeah,
okay?
and don't commit tax fraud first. You know.
So that one's funny.
Quick tip.
Truly in there.
Yeah, I believe you. I'm sure you've seen some things, you know. I write books, you know. I could take some inspiration from you, turn that into a mystery. Cool. So that's great information. And in thinking about your 1099s, you had mentioned something about that earlier. So, and keep thinking about your taxes for your 1099s.
Yes, yeah. So you want to keep any 1099s. So it could be for income. Most 1099s are for income, but dividends, interest, 1099 miscellaneous, or non-employee compensation. So you definitely want to keep those. If you get a 1099, you want to keep those for 7 years.
Okay.
But your W-2s, home interest, mortgage interest, things like that, those are typically the 3 years. But the 1099, the small business owner, all of those, yeah, that's where the IRS is really heavily focused. So if they do come and ask for, a lot of people throw the word audit around.
Mm-hmm. Seems like a really scary word.
And it does scare people, but really they want confirmation.
Mm-hmm.
So
slightly less aggressive word.
Yeah, and I don't want people to be scared of the IRS, because actually the state of Virginia is harder than the IRS to deal with, honestly. So IRS are usually nicer folks. So, but sometimes, hey, if something doesn't match up, or your employer filed something different than what you filed on the tax return, yeah, I mean, they're going to ask, hey, what's up? I got something different.
Yeah.
I wouldn't be scared and think they're going to come take your kids and your dog away from you because, you know, you made a little mistake.
Right.
We just got to fix it.
Yeah, don't come take my dog, man.
Yeah. That's the last one I want.
That's the last one I want. My gosh. So, man, that is super helpful information. I know we've done a really broad 101 kind of overview, but I feel like I've learned a lot, and I want to talk to you more about this AI stuff eventually. So
yeah.
We'll have to get into that because that's so interesting.
We just got back from a conference in Boston,
yeah.
So I have all sorts of info right now.
I bet, and it's gonna keep evolving, so you'll have lots to learn in coming time. Gosh, cool. Well, so I always have one bonus question for everyone at the end, and that is a pretty simple one. As far as you're in the area, where are you going, playing, eating in our region?
Going, playing, eating.
Where do you love to eat? What are you doing in your spare time when you're not filing everyone's taxes away?
Oh my gosh! So me personally, I love Bloom.
Me too. It's 3 blocks from my house. It's a problem.
Is it?
It's a real problem.
Oh man,
it's a good problem.
Yeah, it's good people that own it. I love to go there and eat.
Cool.
So,
I'll wave at you next time I see you there.
Oh yeah, I'm there a lot. And then where do I play mostly? That's in my backyard.
Yeah? Okay. That's all right.
I'm a homebody.
That's me too, man. I totally understand.
So gardening or building something, that working with wood.
Cool.
That's my therapy.
Nice. It's a good
working
hobby.
with wood and mowing and making a pretty yard.
Yeah, well, it gets you away from the spreadsheets and computer screens, so
Yes.
that's pretty good.
Yes, gives my eyes a break.
Yeah, cool.
Which you understand that.
Totally understand. Awesome. Well, thank you so much. This has been such helpful information for listeners and readers wanting to know more about their tax options and responsibilities. Thank you, Michael, for being our guest on From Print to Podcast today.
This was fun.
Yeah, thank you. And for keeping us out of trouble with the IRS. That's key here.
Whatever I could do.
Thank you. You can be sure to read more about preparing for your fourth quarter financials, as well as the rest of our financial section, highlighting local experts who can help with your questions and needs in our latest issue, the November-December issue, on newsstands now, and you can always see more at theroanoker.com.